There is a building in Washington, D.C. that shouldn't exist. The old Post Office Pavilion was completed in 1899. It features a 315-foot clock tower, vaulted ceilings, and solid granite columns. It cost over $3 million, and the federal government built it without collecting a single dollar of income tax from American citizens. The official story we are taught is simple. Before the 16th Amendment authorized an income tax in 1913, textbooks state the government funded itself entirely through modest customs tariffs, sales of public land, and excise taxes on things like alcohol and tobacco. But the physical evidence tells a different story. In the decades leading up to 1913, the federal government funded the entire Transcontinental Railroad system, constructed the massive palace-like Library of Congress, and maintained a standing military across 45 states. The presence of these massive structures suggests a level of capital that official records from the era struggle to explain. They stand as a challenge to the idea that the pre-1913 government was a small, underfunded operation. This chart compares the total official federal revenue of the 1890s against the known costs of naval expansion, the Panama Canal, and the construction of 27 new federal courthouses. The numbers stop cooperating with the textbook explanation. To understand the scale of the spending, look at the military. In a single decade, the federal government expanded the Navy from 42 ships to 95. The USS Indiana, launched in 1893, cost $3 million alone. This spending extended into domestic architecture as well. The interior of the Pension Building, completed in 1887, features massive yellow marbleized columns and architecture matching the scale of European royal projects. When the costs of these massive projects are weighed against the official revenue of the decade, the math fails to balance. It indicates that significant wealth was entering the Treasury from sources that remained off the public books. The most undeniable proof of this funding anomaly sits directly in the records of the 1893 World's Columbian Exposition in Chicago. This sprawling landscape of neoclassical architecture, known as the White City, required enormous capital. According to the official exposition directory, the primary government building was funded entirely by federal appropriations. It featured a 120-foot central dome and Corinthian columns carved from Indiana limestone. It was completed in just 18 months, at a cost of $400,000, and then demolished 6 months later. Treasury records show that in 1891, the government was already running a $146 million deficit. Covering the rapid, fully funded construction of a temporary exhibition building via official channels is logically impossible given the recorded budget shortfall. Decades later, the clerks who managed these specific accounts began speaking to historical researchers. A customs clerk named Mary Duckati and Treasury accountant John Hastings independently described reviewing federal expenditure reports and finding surpluses that didn't correspond to tax collections. They testified about the existence of special appropriations and separate ledgers that they were strictly forbidden to discuss. The testimonies of the people balancing the books reveal that the federal government actively maintained a shadow accounting system. They were managing vast sums of wealth completely isolated from public scrutiny. The mounting discrepancies eventually forced official action. In 1910, a congressional investigation led by Senator Nelson Aldrich finally audited federal expenditures from the previous 2 decades. The 1911 report reveals a $340 million gap from 1890 to 1909, loosely categorized as internal improvements, without detailed sourcing. Gallatin testified that non-tariff revenue from mineral rights and railroad leases flowed into a secondary ledger of administrative accounts, bypassing public reports. The commission immediately requested documentation of these specific accounts. The request was referred to the Interior Department, who outright refused to produce the ledgers. No further investigation ever occurred. When the Interior Department refused to produce the records, the investigation hit a dead end, leaving the source of that $340 million discrepancy buried in the departmental archives. 1913 marked the end of the old funding model, as the government shifted to a centralized income tax and the Federal Reserve. This move consolidated financial control and replaced the older, decentralized methods of managing wealth. Almost immediately, the paper trail of the old economy began to disappear. In 1921, a fire in the Treasury Department Annex destroyed decades of internal revenue collections from the very era the Aldrich Commission had investigated. 3 years later, the Interior Department purged a massive volume of pre-1913 land management records. By 1933, New Deal reorganizations moved to consolidate the Treasury ledger systems, reclassifying old special appropriations into generic miscellaneous receipts. By the time the last clerks from the old system passed away, the records had been reclassified or destroyed, leaving the official history of a small, tariff-funded government as the only surviving narrative. While the paper ledgers were successfully burned or reclassified, the physical receipts of this wealth system proved too massive to destroy. The stark Roman temple design of the U.S. Custom House stands as an immovable artifact of that era's true financial power. The generation of accountants and Treasury officials who quietly managed those off-book millions took the exact mechanics of the original American economy to their graves. We are left with a simple choice: accept a textbook narrative that fails basic arithmetic, or look directly at the enduring architectural anomalies in our own cities. The true story of early American wealth is not written in the official budgets. It is carved into the granite and marble buildings that still surround us today.